Good afternoon, everybody. Welcome to Trader Merlin Show for your trading week wrap-up. It is the end of the trading week, and a great one. What a way to end a week. We were talking yesterday about the potential for that CPI number to be a little bit higher than expected, came out lower than expected, and of course that kind of appeases all of the fears that the Fed may not lower rates. Look, with that low inflation number, they're going to juice that one. So we're going to get most likely a 25 basis point cut on Wednesday, and then we will see another one in December. So Big Eb, start planning when you want me to take you out to dinner. Man, you're getting costly, buddy. Costing me an arm and a leg. So first off, cheers to everybody. Let me show you the whiskey of the day. This is from George. George the Myers gave me this bottle. It is called Fable and Folly. It is Orphan Barrel. It is a 14-year-old bourbon, which is just fantastic. Smooth. I don't even grimace when I take a sip of this one. So cheers, everybody. Happy Friday. Yeah, hope you all have a fantastic weekend. I've got a big one in front of me. I will be showing you guys some pictures. The ones that I can show you on Monday of my haunted house, my tunnel, my crazy front yard that I used to scare all the kids. But cheers, everybody. Happy Friday. Like butter. It feels like I'm... At least you would be Big Eb's date. I didn't know he had a +1. I'm pretty sure his wife may be a little bit upset with that one, Lisa. But, you know, maybe we'll just maybe we should do a West Coast dinner date thing. Why not? Okay, let me go into the graphic for today. I have it as the trading week wrap up for our show number 1217. Oh, wild one. Wild one. Johnny on the spot. All right, Johnny, good to see you, my friend. I actually went to a singles thing last night, and I did go solo. I didn't think to ring up Johnny on the spot there, but well, next time, Johnny, you'll go with me to that one. Let's first dive into broader markets here. I want to run through just the big high-level stuff. Today, I did not make any trades. I actually was just watching the market, but I'm just too busy getting some stuff set up over here, so my trading was pretty much done yesterday. So we'll still run through it, take a peek at all the exciting stuff. Did I build a Halloween house? I haven't built the house, but I have... First off, I do my front yard, which I'm going to be doing some more stuff to it tonight. I got to go to the store and grab a bunch of pieces. I have a haunted hallway that's like 50 feet long that is designed to scare the kids. And then I do the whole interior of my house as well. It gets kind of crazy. Yes, Steve, I left solo. It was nothing of interest for me, so it was quick, have a beer, and get home. I had too much work to do. I was way behind. So next week, things start to slow down, which is excellent for me. Let's start at our bottom and work our way up to the top here. We had some pretty interesting things happen at the top of that list. As kind of anticipated, we had a little bit of a stall on crude oil. Now, I mapped out this little supply zone for you guys yesterday, which I'm sure most of you had in your charts anyway, if you've done Trading Academy supply and demand zones. And basically, we came up. Yesterday, we tailed into it. Today, we further went into it. And not only that, but we have a shooting star that formed today. So that, unfortunately, leads us into the weekend. Like, it'd be great if we had this chart formation right here on, let's say, a Tuesday or a Wednesday, because then we might get some follow-through to the downside here on crude oil. So it looks like you're poised for a little bit of a sell-off here on oil, but again, going into the weekend, you just never know what can transpire over the next couple of days with regards to markets, with regards to Trump, with regards to Russia, with regards to the Middle East, just too uncertain. So nice little reversal there as anticipated off that supply zone. Oil was down 0.53% today. Gold also taking a little bit of a breather, although it recouped much of its losses. It was down much more than where it finished. It was down 0.43 at the end of the day, 41.27 for gold, and I still am keeping my eye on that 4,000 level. I think that's a line in the sand. We should all be keeping an eye on for gold there. Dollar index, meh. This is your second day in a row of almost no change between where it opened and it closed. That's not a really positive sign. That means just complete indecision. People don't know where this one's going to go. You saw today you had a small topping tail, a small bottoming tail, but ultimately totally unchanged, right? So no big deal here with the dollar index. That was not a big impact on the market. And as you guys remember from the discussion I had yesterday, this is usually a very significant piece for me. I'm definitely looking at that dollar index every single day to get a sense as to what the trend may be, where it might be headed, and how it might impact the swing trades that I may be in, whether that's oil or broader equity markets. And the dollar index is just so important. And really, for 3 days in a row, giving us nothing, absolute nada. All right, then you have the 10-year, which was unchanged as well. So rather boring markets from the dollar and from the 10-year. Don't worry, we get some exciting stuff coming up here in just a little bit. So the 10-year at 4.03%. Nice to see the 30-year fixed rate mortgage is starting to drop a little bit based off of this, which is great. And now we move into the top 4. Bitcoin making it back near the podium. Not a number 1, 2, or 3 spot, but it rounds out at number 4 for my top 8 list here. Bitcoin is up to $111,095. That's a $675 gain, or 0.61% on the day. But technically, it still does not look that great. I mean, we're just kind of bouncing and chopping back and forth right at that 108 to 109 level, and it just doesn't feel good. Doesn't feel that great. Now, I was really looking at maybe, so the account that I'm sharing with you guys, which I call the Trader Merlin account, that one right now just has the puts on it, right? We sold the 245 puts a couple days ago. That's expiring next Friday. I think we'll be fine on that. I have other accounts, which I'm actually currently long IBIT on, and I sold more puts on IBIT because I think over the weekend you'll see some upside momentum here. You just had 2 positive days in a row. It's been kind of pushed down. I think just artificially pushed down. You also have a new proposed chairman of the CFTC. I think Trump appointed somebody or nominated somebody today to be the new CFTC, and he is a very pro-crypto guy as well. So as anticipated, as I mentioned, Trump putting in people in these positions because they are very pro-crypto. As we all know, the Trump family has a massive exposure to crypto and digital assets. So why not look for favorable rulings going forward? And I think that that's going to resonate more in the industry. You had the pardon of CZ and other things, which to me just speak volumes to more positive stuff for crypto. So that's all good. Next on the list, S&P 500. Up 0.75. This is the real story, right? We have markets at all-time highs again. Now, we had that little yellow box, which is kind of this consolidation phase. There was a great short trade down below it for the day. Now, all of a sudden, you got the rip to the upside. And as I mentioned, normally you would like to see this breakout with higher than normal volume, but either way, it broke through those all-time highs and continued to run today. So looking great for the S&P 500 is 6825.5 is where it sits right now. NASDAQ, same picture, right? NASDAQ broke slightly higher volume, but nothing really that nothing to write home about with regards to the volume. But 25,513 is where we ended up with for that NASDAQ. Again, 1.02% gain, 1.303 right now as the markets have changed. And finally, the Russell, the only one out of our broad big market indexes that did not make an all-time high today. Russell was up 1.12% to 2521 and still looking absolutely fantastic. Big Eb says JP Morgan is allowing Bitcoin for collateral. I'm hearing more and more are using Bitcoin as collateral. And what's that going to do? It's great because if you think about it as a consumer, and you can use dollars as collateral, right? They like to use it, you put a down payment in with dollars or use it as collateral. If you use a dollar, it's diminishing in its value. That value deteriorates over time. In principle, based off the architecture of Bitcoin and how it's built, designed, and how it's released, and the demand and supply effects, you're looking at something that over time should continue to move up in value. So why not use it as collateral, right? I'll use my Bitcoin as collateral. Therefore, I don't have to sell it, but I can use that, borrow against my Bitcoin. And I think more and more financial firms are going to start to do this, which to me will generate higher upside movements in Bitcoin because more and more people will choose to use Bitcoin versus other forms of collateral because of the appreciation of the underlying asset along the way. What did market say? And then it dumps. What will they require? Cash? Well, how much will they loan against one Bitcoin? I don't know what the exchange rates are. It depends on who you go to. I've seen like 75 cents on the dollar on different DeFi exchanges. So you could put a Bitcoin in there and basically you could borrow, let's say you put in $100,000 worth of Bitcoin, you could borrow $75,000 worth of a stable coin. But that's on DeFi marketplaces. Given the regulatory scrutiny and oversight from SEC and other agencies, I'm pretty sure you're not going to get that kind of collateral leverage at a major financial firm like JP Morgan, Morgan Stanley, Goldman, whatever. But I have a feeling a lot of that's going to be negotiated as well. That's a question I don't understand is how do they deal with it, market? Well, what they'll do is they will keep so let's say you need to borrow $100,000. Well, you can put up, let's say, $50,000 worth of Bitcoin. And they'll put, well, maybe it wouldn't be that much. That'd be 2 to 1. So let's say you want to borrow $100,000. You put up $200,000 worth of Bitcoin as collateral. Now, if Bitcoin would drop 50% and now only be worth 100,000, they would liquidate your Bitcoin automatically. That's what these DeFi marketplaces do. There is a liquidation point where if it drops to a certain value, they'll instantly liquidate you, and they will never lose money because it's automated. And I think it's going to be the same thing for these institutions, right? You'll most likely have to over-collateralize with crypto. So, for example, let's say I have $1 million worth of Bitcoin. Yeah, I would love to take that Bitcoin and buy a home with it. But most real estate companies won't accept Bitcoin as payments. What do I have to do? I'd have to sell that $1 million worth of Bitcoin, pay a massive capital gains hit on it, which now puts me probably only having $600,000, right? Take 40%, let's call it 50% tax and all that. If I got $1 million, I now have $500,000. Well, now I can't afford that house. But if I had the original $1 million worth of Bitcoin, I could collateralize a loan, probably get a bit more leverage there, get more money borrowed, and still keep my assets without having to pay any capital gains taxes on it. So that, to me, is how they're going to do it. Have the banks allowed equities for collateral in the past? Not to my knowledge. But remember, equities are not commodities. Has a bank allowed... the bigger question here, Big Eb, is not stocks, because those are securities. Remember, Bitcoin is not a security. It's been declared a commodity. CFTC is now the one that regulates that. So if you're going to call it a commodity, the question would be, has anybody collateralized with gold or silver or oil or corn or wheat or soybeans, commodities, which, and I'm pretty sure that in the past, someone is out there and used gold as collateral for loans. I'm pretty sure. Don't know 100%, but I would assume that would be the case. If someone's got a bar of gold they don't want to sell, all right, I'll throw it in your vault at the bank and you guys give me a loan against that, because they know that the value of that gold is most likely going to maintain its value over time. If that makes sense. I hope it does. We got these abstract off-the-cuff discussions today. Requires another sip of my Fabe and Folly Orphan Barrel. Again, cheers to you all out there, and happy darn Friday. All right, what do I got as other questions? This is another good question that is on the same vein. Ben, back to back, he says, you have mentioned that you own gold and silver. What do you do with it? When do you sell? I think this all depends on what everyone's objectives are. So let me explain a little bit about how I handle my, we'll just say, wealth creation and growth of long-term, value and net worth. The gold and silver coins that I have purchased. So I've got gold coins, I got silver coins, I've got some gold ingots, I have some silver bars. I bought the 10-ounce bars there last year, and a few other little rare coins. Those were not intended to be sold. Those are just, I have some extra capital. I'd like to buy something that historically appreciates in value over time. Therefore, gold, silver, rare coins, collectibles, things like that. So I don't plan on selling those, Ben. Those would be like an emergency. If I absolutely, hit the skids and needed money, yeah, I could always fall back and sell those gold coins or whatever I had. But I put them in a safe deposit box. Sometimes when I have some friends over, I'll bring them out and we can look at kind of the historical side of things in gold and silver and coins. But I don't really do anything with them. I just put them away and just leave them there and don't really do anything with it. I don't plan on selling those. If I ever have a family and children or something, I'd will those onto them, and hopefully they would keep it for the test of time. Because over time, historically, we've seen gold and silver and other assets appreciate in value. And that may be something like artwork as well. Steven says, Merlin, what the breaking point for you if gold, etc.? If gold goes to 10K per ounce next week, are you out? No. Not out of my rare coins. The rare coins I'm keeping. I really just think they're special. I've got some back from the 1800s. I just think they're just so cool to think about. This coin is old. It's over 100 years old. And it represents, just a window in time where maybe I'm weird. I'll just sit with the coin and kind of hold it and just wonder what life was like back then when this coin was issued. And it kind of takes me back like a portal. I don't care. I don't do that at all. I keep the gold there. I'm not worried about it at all. Now, the silver bars that I bought, right? Those there's no special significance to those. If I saw silver spike in value, I might sell it. But here's the real problem with silver and gold. When you look at metals, we can look out here and look at GLD. Right? Let's go look at, let's just look at gold futures, even though it's closed. Let's see what the spread's like right now. Okay, you got a 3-point spread. So it's 4,125 by 4,128 spread on gold futures right now. I can assure you that if you went right now and said, hey, I would like to buy some gold at $4,128, you're going to pay a higher price than that. You're going to pay a premium when you go to the coin store, the bullion place, whatever. And if you decide to sell your gold at $4,125, I assure you, they are not buying at this current price. They're buying at like $3,800. So you pay a monstrous spread and give away a big chunk of that profit when you're trading physical commodities, which is why if you're looking for it from a trading perspective and looking to capitalize on shorter term, daily, weekly, maybe a couple month swings in price, then absolutely do not buy physical gold or silver. You stay with the futures products, or you stay with GLD or some ETF. Don't go near spot prices because the spreads are just absolutely ridiculous. Now, over time, with my gold and my silver, I am anticipating price appreciating on those, and maybe it'll get sold someday. But I don't worry about it. I don't worry about it. Toby says he's going to put it in a chest and bury it. I thought about that. He's going to put it in a chest, travel on a ship with it, and when it gets lost, he'd have a map with X. I thought about it since, unfortunately, the previous relationship was one where I thought I would have kids with. I don't think children are on the plate for me anymore, which is unfortunate. I certainly would love to have kids. I may actually do something like that. I'm that type of person. Since I have no one to will my wealth to when I die, I may do something like that where I put together a series of tasks or missions or treasure hunt and bury that gold somewhere in an extremely remote location where I won't even have proof that I've been there because there won't be any plane tickets, car transportation, nothing, and leave clues on how to get that. So who knows? Maybe that will be something many, 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 many years down the road I'll do with it, but ideally be passed down to my family, my generations, my kids, and stuff like that. Let's see. I keep my silver coins for emergency trading if the doo-doo hits the fan. My gold coins are for speculation. All right, cool. There's not an investment. They're a collectible for you. Yeah, I would say that they're both, right? They're an investment, but they're also a collectible. Here's the thing I have with my problem with collectibles. So many of you might know I collected baseball cards for a long time. And I still kept all the really good, valuable ones. But really, the only thing that makes a collectible is if somebody else believes it's a collectible, right? So I could collect a baseball card. Let's say, Mark McGwire's rookie card, which I have a bunch of those. Well, as time goes on, Mark McGwire is not as popular as he was. Oh, he's a steroid guy. Oh, he did this and that, and he was bad. The value of that card is going to drop. And if people forget his name, they're like, it's not worth anything anymore. Of course, right now, you have yourself a Shohei Ohtani card. Everybody knows that Shohei Ohtani is one of the greatest baseball players to ever walk the planet, and he's still got years to go. This kid is a once-in-a-generation, once-in-a-lifetime type of player, in my opinion. Those cards, everyone perceives to have value. So, everybody perceives him to have a lot of value. So, gold coins and silver are a no-brainer for me because for thousands of years, gold and silver have had a value, a perceived value from societies around the world. So, I have that track record. But, a signed picture of Kim Kardashian, I don't, for me, that has a value of zero. I would literally I'd rather buy a lighter for 99 cents and light it on fire. But that's why I went with gold and silver. So it's a collectible, but I also know that over time there's a track record of price appreciation. For the right price, my kids are for sale, Merlin. Sorry, now I would like my own. Let's see. Yeah, no. Always learning, Rita. Okay, so Ben, that's it. I don't plan on doing anything with my gold and silver. If you look at how I've structured my life, I work a full-time gig, and I do other gigs for other people. I work for, I think, 4 different companies now, just kind of doing different pieces for them. That's what I live off of. I have not pulled money out of my trading account in 20 years. I've not pulled money out of a trading account in 20 years. So you just kind of, I pretend that money doesn't exist, right? I don't try to live off that. I live within my means, and I just live a pretty humble life, I would think. I'm not driving fancy new cars and living the lavish lifestyle. I'm pretty down to earth on it. So for me, trading, I should be fine with my accounts. As they stand today, I should be fine with the way my accounts have gone, but I don't touch them. I don't pull anything out of those. And even when I have to pay capital gains and taxes on it, I pay out of my regular normal accounts. So just to tell you guys a little bit about how I run things. I know a lot of people are pulling money out of accounts, and it gets kind of complicated, but... All right, let's see. What's the second question I had here from Ben? Or no, this wasn't from Ben. This is from Tom. I don't think this is Tom that left. But Tom says, can you look at UnitedHealth? Are you still bullish? Yes. I think my comments should have been abundantly clear. UNH, I'm definitely bullish on, although I would be cautious because next week, I think on Tuesday, let me check here. Yeah, Tuesday they have their earnings announcements. And you just never know what's going to happen there. So from a risk management perspective, probably best to stay on the sidelines there. I do not own presently any UNH. Mine got taken away from me a couple weeks back. I've been looking at selling some puts. I've really been waiting for a drop. And as you noticed, it really has not fallen much. It's been slowly drifting higher. I will probably wait till after that earnings announcement on Tuesday. In a perfect world, they're going to say something really bad and it's going to tank and I can sell a bunch of puts at a much lower price. But you just never know. So it's a risk I'm willing to take. Sometimes, as many of you understand, when you wait and you're hoping for that lower price or anticipating a lower price, because I hate the word hope, that seems to be when the news reports are all amazing and it gaps up and just has a huge rally and you're kicking yourself going, why didn't I just buy when I originally wanted to, right? Why didn't I do that? Well, unfortunately, I'm just being a little bit skittish. Not skittish, but just being very, very cautious with my risk management right now on UnitedHealth. And again, I don't like to jump into things right before earnings. So that's, I'm still bullish on it though, Tom. They're too big to fail. They're a massive company. They're into healthcare, which, health costs are just going to continue to rise and rise and rise, regardless of what Democrats or Republicans say about how they're going to fix things. And you also have Warren Buffett jumped in for $5 billion on this bad boy. So I think you're probably in a pretty decent spot on UNH. Let's go look at some others. If you guys have stuff you want to talk about, those are the two questions I got in today. So I've answered my questions for the audience. If you guys have some, let me know and we'll dive into it. Otherwise, we're going to have an early show today. More time for me to go to the store and get more supplies for my haunted house so I can scare children. Let's go look at MicroStrategy, which had a slight update. It was only up 1.46%. This chart does not look good, right? It absolutely does not look good. It looks actually, honestly, really bad. It feels like it's just, as John would say, a bug in search of a windshield, just drifting lower and lower and lower. So I did sell the 245 puts, which you have that blue line, or not blue line. Jeez, can't even talk what color it is. The green line, I think is green at the very bottom. So that's where my strike ends next week. That's the only one I have open. It's a good position, good size position, just because why not make some premium. The big challenge there is my options expire there, and their earnings come out on Thursday. So that to me is the difficult one, right? You got a challenge where their earnings come out a day before my expiration of options, which could create significant volatility. So we'll see what happens on that one. Mike says, Merlin, plenty of actors have kids in their 70s. De Niro has a new dad at 79. The difference there, Mike, is I want to be a very active parent. I would like to be the stay-home dad, right? I put myself in a position financially where I know I could just be the stay-home dad and take care of that kid and raise an amazing child. The thought of being 70, 74, 75 when my kid turns 21, I don't know about that. I don't know. And I think when you're that old, let's say I wait a few more years, I'll be 80 and my kid turns 21. It's like, you want to put your kid through having their parent die at such a young age? I know it was painful for me when my parents died at a young age, and that was very damaging from a psychological perspective. So I don't know if I'd want to force that on a child, right? Knowing that child is going to know that by the time they're in their 20s, maybe early 30s, that their father's going to pass away. I don't know. I'm in a conundrum. First off, guys, still got to find the right person to do that with. So I'm not giving up. So cheers to the optimism. I like the optimism in the group. I'm not giving up. Who knows? Could be a fun weekend. What market questions do you guys have? There was this one, and I kept looking at Oklo today. But Oklo, man, so bummed that it did really had a nice big pop to the upside today. We saw a 9% jump in Oklo, and I was really hoping I was just too risk averse on this bad boy. Risk averse, big time on Oklo. Remember, I tried to sell the 75 or 76 strikes, which have been down here, and I had no takers on it, and man, I wish I would have gotten that one, just ripped to the upside. So looking pretty darn good there. Let's go look at ODFI. I don't know if that's an acronym or something. Okay, that's an acronym for something. Big Eb says NASDAQ at 27,000 before the year end. Man, let's look at the statistics. So just look number-wise. 27,000 by year end. All right, so we'll do two things here. Number one, let's slide this over. Number two, let's put a vertical line on the year end so we can map that out. And there she blows right there. And you're saying 27,000 between right now, and 27,000. All right, let's see. So it's roughly right there. So that means that between today and the end of the year, the NASDAQ would have to rally 5.9%. I don't think that there's anybody in this room who would say that that's out of the ordinary, right? I think that it certainly could happen. And with the way that things are going, we've talked about, I did a show the other day called BTFD, right? Buy the freaking dip, because momentum is there. Momentum is strong. You have things that the market just kind of keeps pushing higher and higher and higher. You've got Trump, who is shocking the system with really abrupt comments and offending countries, but then he backpedals and does the taco trade, and all of a sudden things start to rock again. So I don't feel like this can be any different. I really think that within the coming months we could get some resolution with China, and if we get that locked down, yeah, absolutely, Big Eb. Yeah, he's like 6%, easy. Yeah, especially the way this thing has been moving. Especially the way this thing's moving. Johnny Chinga says, do you trade forex? Not anymore. I don't trade spot forex. Occasionally, I will look at the futures market. The reason I don't like the spot forex market is you have to trust your broker-dealer. Your broker-dealer, in many cases, is trading against you, and I think that becomes a conflict of interest. And you have fragmented liquidity pools where you go from different brokerage firms. It's like crypto, right? Coinbase's liquidity pool is very different than Kraken's, which is different than Binance, which is different than Gemini. They each have their own customer base, and that's how spot forex market works. So I don't like spot forex at all. Futures, though, because they're centralized, typically going through the CME, I'm fine. I actually have no problem trading the futures products if I find an opportunity and something that I like. Sure, and you don't see me on this program too often going in through the forex market, but usually I will. I'll go back through here and real quickly just glance at the different markets. Like for right now, USD JPY. I would argue that I'm looking for a reversal on the US dollar right now against the Japanese yen. I think that US dollar is going to sell off a little bit, even though we're in an uptrend. We're coming right back into a retest here, a little double top potential formation. So I'd be more inclined to think of a pullback here. Same thing on the euro. Euro boring. I wouldn't touch it. But most of the time I'm trading US, the majors. So I don't do cross pairs. Just I'm weird. US dollar again, pullback, probably coming down to the demand zone right around 139.3. 139.5. Excuse me. You have a little demand zone right there. So yeah, I look at it the exact same way. I just go through and just look for price levels I like. Here's the Aussie dollar. Why would you touch this thing? The last 8 days have been literally the exact same candle over and over and over and over and over and over again. Not very good. What else? GBP, British pound. Looking weaker. I would actually wait for a rally up to short the British pound against the US dollar just because it's been making lower highs and slightly lower lows since August. So yeah, when I see something that I like a lot, then I will go to the futures market. But I don't trade the spot futures anymore. Good question. We should look at our SPY predictions. Well, I don't know who's closest. I haven't looked at that one in a while. Let me see. I can't remember where I put all this stuff. Let's go to, I think it was, daily materials. Here we go. I think I brought it easier than explain. Levon says, can you explain to us what made you switch from day trading to swing trading or options? Good question. It's pretty simple, actually. It's business. So back when I got started in 1998, it was high-speed day trading was the thing. And I was in a room with the most active traders you will ever meet in your life. I had one kid right next to me trade 3,000 trades a day. That was his like average. Mine was 550, which is insane. And back then we were taught to day trade because the technology was new. So you're taking advantage of a new system. And as more and more people learned about this system, that market inefficiency, which I was allowed to exploit from 1998 to 2000, the advantage disappeared. And so all of a sudden, I'm still making a lot of trades, but the profit margins declined significantly. And by the way, I'm spending $5,000 to $15,000 a day in commissions. So once I looked at the business side of it, right? Where am I making money? Where am I losing money? I was making money on my trades, but I was losing money on the sheer number of trades. So I started to refine that down. And one of my friends used to always call it the sniper approach, which I really respected. He would say, look, you got 5 trades you can make today. Make them count. So then you really think about what you're trading, how you're going about making those trades, right? Being very specific in how you target trades. So I adopted that. I like it much better. I think there's a lot less stress, especially for the older people. If you're trying to day trade, super high stress, man. You get ulcers real quick. You got to be able to make split-second decisions without even thinking about it. Automatic, robot. Most people can't do that. So that's why I switched over more towards swing. I like trades the last couple days to a couple weeks, or removes a lot of the stress. But you have new sets of risks there, right? I no longer have the transaction risk. I have overnight risk. I have individual security risk, right? There's gaps that can happen, so I just need to be careful with that and manage that risk that way. So, what is old? Lisa, I would say when you're getting into your late 60s, early 70s, when you're retirement age. We'll just say retirement age. So, you want to know who is winning this contest, right? So let me go to the SPX. That's the broad market index here. Let's take a peek at what that SPX. You can see I was wrong. I thought we'd have this trickle down and break, and we're going the wrong way. I love it. I love it when I'm wrong, and I have no problem admitting that I'm wrong. All right, let me put a vertical line on where January 1st began, so I can, January 2nd actually, right there. All right, now let's see, what is our gain for the year? Exactly, precisely what is our gain for the year? And we are now, bear with me as I dial all this in. It is a moving target, Big Ed, totally. And it's also, I think in the brain of the person who thinks that they're old or young. I still think that I'm pretty damn young. All right, so right now, as of today's numbers, you're looking at a 15.47% gain for the S&P 500. Oh, wow. I'm surprised who's got the lead right now. We'll see how it ends. But Mike McMahon actually has the lead. His prediction for the end of the year was 6,778. We're at 6,791 right now. So Mike is the closest with regard to the S&P target. That's up. His prediction was 15.24% gain for this year, and this is why I love trading. Because if you think about what my prediction was at the beginning of the year, it wasn't good. Let's show you what it was. We'll go down to Merlin. Oh, I wasn't on the negative side of things. I was on the 7% gain. Where did my number go? Hey. No, I was negative 7%. So I had negative 7%. And even though, and this is why I'm such a fanatic of not holding on to your biases or opinions, even though I had a negative 7.49% forecast for the year, I'm still up significantly. I'm having a really good year, actually, as a trader. And I think that speaks volumes to not holding your opinion and going with whatever that market gives you. So, I have no problem admitting that I was wrong, and clearly I was wrong for the year, but my account reflects that I was right for how I made my trades, and that's more important. So let's see. That's the S&P. So right now Mike has the lead there. Let's go take a quick look at that Bitcoin one here. Just curious to see what that might look like and who's in the lead. Where is my dang cursor? My cursor just disappeared. Okay, I'm either losing it or I can't see it. It's disappeared on the... there we go. So let's go back to Bitcoin here and see where we stand for Bitcoin just for fun since the beginning of the year. I'll do the same thing, throw a little vertical line on January 1st, which will actually be January 2nd. All right, so there is January 1st. I'm going to go put a line right on there, and we will draw it. Certainly up, but how up? All right. Bear with me as I dial all this in. I know it takes time to get all these lines drawn. So where we are right now for Bitcoin would put us up about 18.69%. 18.69%. Who's the closest on that one? Ouch. That's going to be Case Sweeney for right now. Case Sweeney's got 108,000. He said up 15.19% for the year. We shall see how that ultimately pans out. I don't think my prediction is going to get hit. I mean, a lot of people here had some pretty lofty expectations. My target on this one was 169. Nope. I really doubt we're going to get there now. But you never know. You never know. We got time to go. Exactly, Rob. He said we just go with the flow until the end. And, this is... this is the backbone of trading. So, I think yesterday one of the questions was, what do you look for to look for market direction and where things are going to go? I'm looking at this. I'm looking at the price chart. Now, I can anticipate where I think that the patterns may go. I'm going to leave this up for the end of the year. Right? I'm going to leave this here just to see how wrong I was. But, we didn't break these levels, so I had no reason to go short. And at this point, I'm still staying long because the trend overall is still up. So... what's the price? I don't know, Rob. I don't know. I just sent two of my last shot glasses to Charles Payne as a thank you for the dinner we had, and we'll see if that pans out. It'd be nice to have some conversations on Charles Payne's program about digital assets, which I think is definitely lacking. Technic says, do you like cold storage for your crypto? 100%. Absolutely. I wouldn't keep my crypto on an exchange. I mean, I keep a little bit there when I teach my classes to show people how to move it back and forth and where it should go. But yeah, no way you should keep your crypto on exchanges. Get it off the exchange. And Tofi, you're totally right. You said it's not the end of the year yet. Not the end of the year yet. Let's see. What else I have here? You guys got a bunch of questions come in. Big out. I'm too old. Beer plus one for dinner. What? It's never about, yeah. The age thing was just typically, Lisa, don't get me, I know I feel like a bad person for making old references. Typically, those who are in their 70s, their reaction times are a lot slower. The process, the computer has slowed down a little bit, right? We haven't gotten to the point yet where you can do a RAM upgrade for your brain, which would be awesome. I still think I function at a pretty high level, and I know that I could go and compete with day traders today, but the stress of it is just not worth it for me. I just don't feel like the stress is worth it at all to be a day trader. You know, and when I was speaking with the college kids, it's like, I know what they're thinking. I know what they want to do. They want to day trade. They want to make a ton of money real quick. And it's like, you're much better. You have a much better probability of being successful, in my opinion, if you're a swing trader to start or position, right? Because you need to have time on your side. If you are a day trader, you don't have the benefit of time. So you have to take bigger risks with bigger share size or contract size, and you're trying to make a nickel versus the swing trader trying to make 50 cents or $5. So to me, way better, way better. Big F says, my golf has gotten better with age. Yes, and I'm going to go out on a limb here and say that's because you now have a lot more time to play golf, right? When you're probably in your 20s, you didn't have all that time. Now you have a lot more time. All right, let's see. Merlin, you mean people, not this group. True, in general. No worries, no worries. Just don't give it back at the end of the bend. Yep. Let's see. Oh, yeah, you're in Jersey? No, we're not. We're not driving to Jersey to pick you up for dinner. Okay, what else do you guys want to go over? We're at 37 minutes. I'm going to wrap this one up because I just got too much to do. I need to run to the store and grab a bunch of stuff. Anything else you guys want to cover before I wrap up? Oh, we didn't talk about the CPI number today. Pretty good. So if we go to the CPI number, which came out today, expectations were we're going to come out at 0.4, came out at 0.3. So we are seeing an increase in inflation from 2.9% to 3, but they thought it would be 3.1. So great. I mean, this is pretty good news here. Even though it did tick up, we have seen 5 months in a row of CPI go up. It's not as high as anticipated, and I think that takes a lot of pressure off the Fed. And we can go and look at the Fed funds futures chart here. Most likely, we were still going to get that in almost 100% probability of a rate cut next week, which of course will be Wednesday. 4 days away and 20 hours, 21 minutes and 42 seconds away from it, and it's actually dropped a little bit. It was 98.9 yesterday. It's 96.7 now. I would be blown away if they did not cut rates next Thursday. Levon says, when I started, I made $150K in a month, and I just ruined my psychology since that. Oh, yeah. Yeah, you made $150K in a month. You were taking extreme chances, Levon. And, usually when people take extreme chances, it's great to start, and this happened to me too. My first day trading was phenomenal, man. I made a bunch of money my first day, and I was like, oh, this is so easy. And then all of a sudden, the market just leveled me. Kicked me in the butt. So, my goal is not to make a lot of money in a short period of time. I have zero interest in that. Mine's to make a significantly large amount of money over the course of my lifetime. So I don't worry about the short-term stuff. Just go big. Go big time. Long time. Monthly or leap option trading, hedging this. What'd you get there, Rob? Retirement accounts for swing trading is the way to go to get some time till it's not anymore. Yeah, and that's kind of what I do with my 1% account, right? So I got the big capital. I told you I do a 1% account where I'm just selling monthly options on the major indexes or ETFs that I think might be timed right. And you look at some of these ones, and there's definitely some opportunity when we go look at the S&P sector ETFs here. Let me bring up those sector ETFs. Obviously technology, no, because that's at all-time highs. We go to things like utilities, right? No, nothing here is great. Let me real quick see if there's anything that jumps off the page at me other than the indexes. IOIR, industrials, building materials was sold off a while back, but let's see if that bounced. So none of these are really screaming anything. So my 1% account, by the way, does not have anything, no positions open right now. We're just waiting to populate that one. But typically, this is the list I use for that 1% per month, right? That's what I'm focusing on. But yeah, I think that I think actively managing your retirement account is probably the way to go. You just got to make sure you don't take big chances because no one wants to give back that retirement account. On the earnings front, we don't really have much to speak of today. I mentioned we had a few names out there. That was going to be Procter & Gamble, who beat earnings. You had HCA Healthcare, who also beat earnings. You had General Dynamics. They beat earnings. Pretty much everybody in the top 10 that was reporting today beat earnings and looks just fine. All of this shifts next week. Obviously, this is the trading week wrap-up. It's a Friday, more of a short, lighthearted show. Next week, you've got Microsoft, Google, Meta, Amazon, and Apple. I mean, 5 of the Magnificent 7 are reporting next week, and that's going to be on Wednesday night and Thursday night. Big time. It's awesome. Going to be a really exciting week. Plus, don't forget on Wednesday you have the rate announcement, which is normal, but what's more exciting is going to be the press conference afterwards. It's 30 minutes after they make their rate cut announcement. I'm going to try to get a couple people on next week. I had a really cool guy lined up, but he can't do showtime. He wants to do it earlier, and I'm like, I can't. The show's been at 2 p.m. Pacific since it started. I can't throw it off and have an 1 hour earlier show. I'll wait. I'll let him work to my schedule, not me working to his. Steve's a big butt. And Rob, he says ETFs, no earnings to watch out for. It's one of the main reasons I do it, right? I don't want to deal with a crazy earnings announcement that just levels my prices. And actually, on that note, we talked about Intel and how, sell half that position. Here's your daily on Intel. And notice what happened with Intel today. It gapped up, it rallied just a little bit more up to that 40.84 mark, which I think we had drawn to another level, and just sold off all day. And that's exactly why I was like, sell half tomorrow. Sell half when it opens up, get rid of the half position, and then put a trail stop. For me, if I had to put a stop loss on this bad boy now, depending on where my entry price was, it'd probably be below this level here, which is, call it $35. It's like, actually go below 34. And the reason is you have this big, long consolidation period. So to me, that is a pretty significant one. And there's a lot of little levels below that, but I would just kind of have that as my breaking point. Sold some into the open, sold cover call. Cool. Perfect. Good. And did you feel good about that one, Steve? Because I know if they continue to rally and hit 43, 44, 45 bucks, you'd be like, oh, Merlin, I hate you. But don't think of it from that perspective, right? You got to look at it as like, this is your job is to manufacture money. So you got to be safe in it. And it could easily have given it all back today, which it pretty much gave back all the gap, didn't it? Almost all of it was given back. So I think taking half off the table is absolutely the right thing to do. You had a big jump up, so enjoy it. Yeah, enjoy those gains. Okay, that's going to do it. Feels better now. Exactly. You never know. The beauty of trading. All right, guys, that's going to do it for me. I'm going to wrap things up here, and I'm going to go run some errands and take care of some business. If you guys have something you want me to talk about next week, feel free. Email me, tradermerlin@gmail.com. You know that one. You can just send them in there. Or put your comments down below any of the YouTube videos. If you guys enjoyed today's show, hit the like button. If you're brand new, hit that subscribe button as well. And I look forward to a fantastic weekend. I hope you guys all do something exciting. George, thanks again for the Fable and Folly bourbon. It's absolutely delicious. And I will probably have another glass of this before I start decorating the house even more. So you guys have a fantastic weekend. I will see you on Monday, and let's go Toronto Blue Jays. Let's go whoever's playing the Dodgers. Blue Jays. Have a great weekend, everybody.